Buenos nachos.
Yeah, no, that's a pretty weird way to start a video, and I'm not trying to make light of a situation. I guess it's one of those weird things in my mind that if you don't laugh, you're gonna cry, because the stock market got rocked today. And in this video, I'm gonna be explaining why the world's largest casino probably isn't gonna be the most fun in the short term, as in I think we have lower to go before things get better. So yeah, the stocks got hit, and I have to be the person to deliver the bad news that I think it's about to get a bit worse. So in this video, of course, I'll be covering that, but most importantly, in this video, I want to get into the detailed explanation of how you could have come up with a plan before market open to know exactly how to handle the lack of bullishness that turned into pretty egregious bearishness. It's gonna get a little nerdy, but I think knowing what I'm about to explain is gonna make you a much better trader. Now, before we get into it, if you enjoy these type of market breakdowns, of course, don't forget to like, subscribe, turn on your notifications, share this video with your grandma. With that being said, let's look at the carnage. By the time the closing bell went dingity ding ding ding, many of us, myself included, were in a lot of pain. Stocks closed lower, with Dow dropping 300 points as fears about bad loans in banking industry grows. The S&P 500 got rejected at an important trend line and lost 0.6%. The Russell really took a hit of 2.3%, and then by the time you look into the financial sector and regional banking, it was bad. XLF, the financial subsector of the S&P 500, lost 2.8%, and this is where things got bloody. The regional banking ETF, KRE, lost 6.2%. So really, that initial article that was talking about concerns in the banking industry, they were not lying. That's exactly what the stock market felt today. When you take a second to look at the heat map of the entire S&P 500, there was a lot of red. In fact, the only green was a little bit of the tech sector, most of it very red, especially the financial subsector. That thing got brutalized. If you were paying attention to the intraday action, we had a shot going into 11 a.m. and then the entire market basically just came undone. The SPY ended up puking, the Nasdaq ended up puking, the Russell ended up puking, and really it was just volatility and gold that were apparently squeezing to kingdom come. So I hope you caught either of those, or maybe you were fortunate to catch the short. Whatever it is, I hope you managed to escape the day unscathed. Alrighty, I want to get through the narrative part of this very quickly of why it happened, because if you're watching this video, yeah, it's one thing to be informed of why something happened, but I assume if you're here watching this, or if you're paying attention to the live show or any of that, you want to know how you can get in front of the trade before it happens to ideally make some money. So here's the narrative. Zions and Western Alliance banks disclosed bad loans tied to alleged fraud. The shares of regional banks and Jefferies tank on concerns about sour loans grow on Wall Street. Basically, they gave out a bunch of bad dollars and it's time to pay the piper. It's not going to be a pretty situation. Hence, a lot of these banks, especially the regional banks, got kicked where it hurts. And of course, when it rains, it pours. Yes, things happened in the financial sector today, but don't forget, we're still in the middle of an awkward will we, won't he kind of rising tension situation with China. China accuses the US of deliberately causing panic over rare earth controls, says it is open to talks. But then from there, the commander-in-chief, instead of calming things down, decided to respond with this. President Trump said the US is in a trade war with China. Trump says if Hamas keeps killing, no choice but to go in. But wait, there's more. There's a lot of issues here on our own home soil. Just today, the odds of how long this government shutdown is going to last spiked to almost 40 days. As I'm filming this, according to Kohrs, the betting market is putting the government shutdown at 39.4 days. But in reality, every single time I check this, the odds are going higher and higher and higher, which has huge implications not only for what the GDP for the quarter is going to be, but what in the world is going on with the Fed and monetary policy and the expected upcoming rate cut. Shutdown leaves Fed in dark on data as it weighs next rate move. Remember, as the government shut down, we're not getting inflation numbers, we're not getting job numbers, and those are the two numbers the Fed needs to know what in the world is going on. Now, to be fair, as I am filming this, the odds of a rate cut, a 25 bips rate cut, are around 97%, so it does seem likely on the October 29th meeting, we will be getting that rate cut, but obviously it is making the job of the Fed a lot more difficult than it has to be. So putting this all together, the fact that the government shut down, issues with Hamas, tensions with China, and now the fact that we're finding out banks are giving out bad loans, well, that's exactly why the delta all day in the S&P 500 got absolutely thrashed, and obviously that all happened along with price. Alrighty, I know I ripped through all that pretty quickly, but it's because I wanted to respect your time and get to the most useful part of this video. How in the world, before the market opened, could you come up with a plan to have actually made quite a bit of money today? Well, very quickly, let's take a step back, and I want to remind you of my general approach to active trading. This has nothing to do with investing. Trading and investing, even though they happen on the same field, they both happen in the markets, they are two completely different beasts. So once again, this is just for active trading, whether day trading, scalp trading, or even short-term swing trading. I deeply believe that you should never be predicting. You should always have a bull case, a bear case. You should have an if-then statement. If this happens, well, this is where I'd be bullish. If this happens, then I will be bearish. It's always an if-then statement. You wait for one of those conditions to hit, and then you go and be bullish or bearish accordingly based on that plan. You never just sit there and say, okay, I think this is going to be bullish today. I think this is going to be bearish today. You want to systematize it so you know what's working and what's not working. So with that in mind, this if-then approach, this bull and bear case approach, what if I were to tell you that basically around 1:30, a little bit after lunch, after this puke, you could have known that this was the perfect short opportunity, not only on a 0 DTE basis, but most likely for a swing trade? Well, check this out. Obviously, shout out to Spot Gamma, best options analytics tool. If you want to check it out, it's in the description below. But I rewound to 9:30. No Monday morning quarterbacking here. You can see that we had a lot of purple, which is positive gamma. Don't think of positive gamma as bullish or bearish. Think of it as mean reverting. Think of it as sticky price action. If we get there, it's kind of hard to move up, but it's also simultaneously hard to move down. That is positive gamma. If you have negative gamma, it's the opposite. It is slippery price action. The more you go in one direction, you're most likely going to keep going in that direction. So anyway, at market open, we're around the key technical, psychological, and options level of 6,700, which is, surprise, surprise, smack dab in the middle of this entire chunk of positive gamma. That is the first thing you should note. We're at a key level, and it looks like the breakout of this positive gamma, which would be very bullish, is above 6,750. And then on the opposite side, things could get hairy and questionable below 6,650, because that would get us out of almost this gravitational pull of price. And if you want to know why that happens, it all deals with market makers and how they have to hedge out their book, but that's really not the point of this video. So anyway, you know 6,750 and 6,650 are the key levels of the day. And all right, let's go to the first hour of the day. This is 10:30. Wow. A lot of that positive gamma just disappeared. So things are getting, once again, closer to that slippery price action. Well, that's at 10:30. Fast forward to 11:30. Even less positive gamma. I'm seeing the negative gamma above grow and below grow, as in whichever way it breaks, and it still might be bullish, it might be bearish, we're really gonna go that way. Fast forward to 12:30. Clearly, we snap below all this positive gamma, and guess what? When you get into slippery price action on that entry of 50, it gets going, and it gets going pretty quick. But what was interesting, as soon as we hit 6,600, that's where a bit of support was found. However, as I was showing you here, we hit a key level, we bounced up to 50, and remember, that is the line in the sand. If the bulls could have held that, would have been a great long opportunity. However, as you start to fail, as we saw here around 140, well, guess what? We get back into the slippery price action. Right here is when we started to crack. There's only positive gamma above, so if we get absorbed into it, that's one thing, but we didn't, and then we just slipped right back down on, once again, the negative gamma. So I hope that gives you a little bit of a better idea of how you could approach this intraday. Obviously, that was all on a 0 DTE basis. So we're going to see how the chart sets up tomorrow. Obviously, I want to know where the key levels of support and resistance, the breakout and the breakdowns are. But once again, especially with this rise of 0 DTE trading, you need to know where all those major open interest levels are, because it gives you an idea of how the markets are going to react, which means you really have an idea of what the market makers are going to do, and thus what maybe you want to do with your own positions. Before I let you go, I should let you know one thing, that today was legitimately bad. Not only did we not really recapture this long-standing trend line, if you wanted to be a bit more generous, you could draw this one out. I'll zoom zoom in just so you can see it. We almost got to the bottom, so you can be like, yeah, that's a bit of a save. If that doesn't hold tomorrow, obviously you're watching the recent lows, which also aligns with the 50 EMA. This is the zone where if we snap, it could get legitimately bad. The fact that we just put in a lower high right here, not so good, but hey, maybe we can survive. But I do want you to know that 6,550, if we break that, and especially if we close below it, that's where we can see another multi-percent drop type of a day. But once again, this has nothing to do with prediction. This is an if-then statement. If in a future trading day, we crack this trend line, today's low, 6,550, the 50 EMA, yeah, look out, we're probably going sub 6,400. However, if we recover above this trend line, take out the recent highs, well, then we might be looking at a new all-time high. Never try to predict, react to the price development, the options development as it comes to you. If you have any questions on anything we discussed, because I know we got a little bit more into the weeds in this one, let me know in a comment below and I'll do my best to answer all of you. Like I said at the beginning of the video, I hope you absolutely crushed today. And hey, let's see how OPEX ends up playing out tomorrow. Don't forget, Monday to Friday, 9 to 11, I have a live show where I degenerately trade my own account. So if that sounds fun for you to watch, feel free to stop by. I appreciate all the good vibes. Thank you so much. I'll catch you in the next one.